All right, hello guys. So today I'm going to teach you something that's really nice, and I really love using it. But you might not see me using it on the charts, but observing it and observing the market multiple times, it has been really great. It has been really effective for me, and I found love in it, and it's the best thing that you could ever do when looking at the charts. All right, so I want you guys to do this. Okay, I'll teach you something today. It's called the London range. All right, the London range is a bit tricky. Okay, so the London range is a bit tricky. You need to understand that there is some sort of consolidation that happens during the market movement during the London range. All right. So let's go, for example, any random day. Okay, I don't care where is it. Let's just go scrolling, scroll to the left side. I don't know, any day, pick any day. I won't look at today. If I want to look at today, I'll go ahead after this example. So let's say I am at 24th March, Monday, 24th March, right after the Sunday. All right. So what I will do is that I'll go look to the charts. Okay, I'll go look to the charts. Before I engage into the London range markets, before I engage into the London range market, I repeat myself, you as a trader, you need to collect. Okay, let's say you are trading Monday here. You as a trader, you need to collect the high, okay, the high, so I'll set the beginning of it, the high of New York session, okay, and the low of the New York session, the previous market sessions. And I repeat myself, if the previous day, the Asian range or the London range has not been taken yet, or the price has not moved up higher, as you see my crosshair now, I don't have a pointer, I'm sorry, but I only have a crosshair to show you. So if you see the markets in this location here, it made a high. Let's say this is the high of the London range, okay? If you see the markets go beyond this, then you ignore that high of the London range. You remove it and you do not extend it to the next day. All right? But if I have a New York day like this, for example, this is a New York session, okay, for Wednesday. All right? For Wednesday, New York session is from 8 a.m. Okay, memorize this. New York session. So, New York session. I'll just type it out for you. Show keyboard. New York session is from 8 a.m. I don't know why the keyboard is small, but it's bothering me. 8 a.m. to 4:59 p.m. All right. Let me continue writing that. God. Let me go back, refresh that one. PM. Okay, that's great. So New York session 8 a.m. to 4:59 p.m. So over here in Wednesday, it is around 3 p.m. or 4 p.m. That's a New York high, all right? You must extend this line for the remaining of the week, okay? And if that week, if you see a high that has not been taken as well, you mark it, okay? You mark it. I'm not showing you where the pointers, where the New York session is, but we mark it, okay? We have to put that annotation done, all right? We have to make it, okay? So before I go to look into this Monday, I have to revise the week after it. I mean, before it. What happened in the week before this? I made highs here. I made highs here. But what did happen? The highs are not taken. The highs are not taken yet in the next day. And the highs are not taken in the next day. So the next day I mark this point. Okay, I mark this point. It has not been taken, right? So what do I do is that I will go back and see. The London range starts from 12:30 a.m. All right, 12:30 a.m. So I'll go to the charts. I'll draw a line of 12:30 a.m. Let's see it. Let's see it here. Boom, 12:30 a.m. I need it exactly. 1 second. Let me just get the 12:30 a.m. there. Okay. All right, I'll just assume that this is at 12:30 a.m. I don't want to bother myself too much with that precision, but you guys should do it precisely. I'm just too far away in the charts to look on my iPad. It's from 12:30 a.m. to 8 a.m. All right. So what you will do is that you will take the low, all right. You will mark the low of the London session, all right, and you will mark the high of the London session, all right. So what you will do is that you will draw a Fibonacci, all right. You can take my values of the Fibonacci. I am using these values of the Fibonacci retracements, all right. So these values are quite important. And what I don't want you to entertain yourself is that I don't want you to look at these yet, all right. 1.52, 2.5, all right. I just want you to have these on for now. Okay, just have these on for now and trade on based on those, all right? Trade based on those, okay? I'm not telling you to take trades at these points, at this percentage, at this price action exactly, but let me explain to you the strategy. Let me explain to you how the thing is going. Let me explain to you why these values in the Fibonacci are quite important, all right? And it is all coming in place, all right? Just give me time on the next lesson or the next 2 days, next 2 lessons. I will provide you something really great for your trades, okay? I'll explain why the Fibonacci I'm taking these values, all right? So I draw the Fibonacci and I check the price. Where did price go? Price go to the 50% mark. It went below it, all right? I took the London range low and the London range high. I took a Fibonacci and I saw the price went 50% down lower, okay? I accept this price as a trade inputs, okay? This is a confluence that the trade has went down to the 50% mark of the London range, all right? I accept that. But do I immediately trade at that location? No. No and no. You use the London range as a reference. Extend it all the way to the New York session, okay? Extend it. You go looking there, okay? That's the London range. That's great. The London range goes to the highs, takes out the London highs, okay? And then it goes back down below the London highs. Makes a higher high, a higher low, a higher high, a higher low, and then a higher high, which is quite manipulated. As you can see here, there's quite a manipulation that happened there. And then it went down. It started to make a lower low, lower highs, lower low, lower highs, lower low, lower highs. And then here, in this location, something amazing happened, all right? In this location, something amazing happened, which I will explain in the future. So when this price action happened here, it went back down to the 50% of the London range, and then it resumed going back higher. But where would it seek its high points? Below this high, above this high, and above this high that it did at the 9:30. What is 9:30? It's a New York exchange open, all right? New York session, New York market open, okay? However, New York session can start from 8 a.m. or 7 a.m., all right? It can start at those times. However, that is only the manipulation, and that's only bringing you value to the charts and bringing you some value to the direction of the markets. However, I want you guys to take trades from this point here to that point high, okay? That's how I want you to identify these actions, these price actions. I don't want you to trade inside the zigzags, inside this manipulation. I want you to take a big trade one time, one shot, and every single time, every single day, this thing keeps happening and happening and happening. Okay? It doesn't matter about manipulation. It's just that if you don't see the chart on the right, let's assume you are putting your hands on the screen, you're covering the right side, what would you do? You would see the market going in zigzags, you would not understand anything, but I'm giving you clarity, okay? After the New York session, after the London session, the markets will try, okay? You go and test it, okay? And I will test it in every single day until we reach the day that I have highlighted for you, all right? The market in London session will make a low, will make a high. In New York session, when it enters the New York session, all right? The market will try to take out either the high of the London session or the low of the London session, and then it will resume its price action. It will either go to the midpoint or the 50%. I don't like to call it midpoint because that's a wrong representation of what I'm doing with the Fibonacci. So I'll take the low and the high of the London session. 50%, I check what does the price do at the 50% mark. Does it reject? Is it giving a good rejection? Yes. It broke the market structure here. It broke the market structure, which is that's something that we will talk about later. And then it started to trace down to some kind of area, which I told you about in the SMC. They will try to do some manipulation down, and then it will take you up. So it happens even in the 5 minutes, not necessarily in the daily, okay? So it went to the 50%, and then now the price action is going up higher and higher and higher, moving up higher. It has non-stop movements because orders were injected within this area here. I'll draw it for you. Within this area, okay? You see where the points are of that box, these circle points. Ignore the one that is extended. So just ignore the extension. Just this point here, just these ones, okay? This price action over here, you should identify the big candles and identify how did the price reject and where did it reject exactly at, because the price action that is shown here is gonna give you one of the best trades of the week. One of the best trades of the week, okay? One of the best. So always mark the London sessions, guys, and keep the lows marked, okay? If the low is not taken, let me remove the Fibonacci. If the low is not taken, you will extend it. As soon as the high is taken, all right, in the London session, keep it for a while, okay? Keep it for a while. Price may tend to revert to it, okay? See, this is the high of the London session. Look, what did the price do? It went back to the London high here. Okay, it went back to the London high. It smashed through it, okay? But I don't want you to refer to it anymore, but we will only be using it in the same trading session, okay? You may use that as a reference, but not all the time it's a good reference. However, the previous day, the London low is not taken. So what do? I have not marked the Asian low, by the way. I just want you to keep focus on the London, okay? Today we're only going to talk about the London session. So we take it up higher. Now its price starts going back down. It goes back to this level, but we are on the next day. And what happens here in the next day? The Asian range is opening. And what do? we will mark the we'll mark the New York low. This is the New York low and that's the New York high. Okay, is the New York low taken out at some point here? Yes, check mark. That's our first profit targets. So during the London session, price will go up higher from 12 a.m. 12:30 a.m. All right, we mark it 12:30 a.m. Okay, to 8 a.m. Okay, to 8 a.m. So from this chart, I can understand that the price, what is it trying to do? This is the lowest point here. And this is the highest point in the London session. All right. So what will happen is that the low of the London session, I extend it to the right and I extend the highs to the right. This is equal highs. And in here we have some market structure. So what do? I draw a Fibonacci from the highs to the lows. Why do I do it from the highs to the lows? It's because the market went down. So it went down again, all right? So it went down again. And I think there is a low. I mean, we can take this low as well. So I'm taking the relative equal lows as the lows, yeah? So the market went down, okay? And then it went up higher. Where did it go? To the 50%. All right, to the 50%. It went and did some management. It went to do some trades within that 50%. I'm sorry, I need to draw it in the opposite direction. Like that. Yeah. And when it did some business here at the price range, okay? It went and did business at the London range. So the price went back to the 50%, and at the 50%, it hit the 62%. I'll discuss the 62% and 79%. Why are they important in the future sessions? All right. But for now, look at the London session. It rejected at the 62%. It went down. And then it went back up to the 50%. It just slightly touched it. You can say it kissed the line. It literally kissed the line. And I like calling it kissing the target and then bumping back from it, you know, bumping back. It kissed it another time and then went down. So it's providing kisses to that 50% value. It's just kissing it goodbye, you know, a kiss of goodbye. That's what the market is doing to that 50% mark. I'm getting away from you, so bye-bye, see you later, all right? See you maybe next day, see you maybe next year, see you maybe next month, next week. That's what it does, yeah? So I remove the Fibonacci now, since I no longer need it. It fulfilled my options. It gave me what I needed. The 50% trade, it showed me that it was here, that there is some price action happening from 8 a.m. to 12:30 or 12:30 p.m. all till 4:59 p.m. All right, to the New York session ends. So what do I understand here is that when the London session was ending, it did like a price ranging movement, and that price ranging movement is called consolidation. So when it's in consolidation at that London range before it enters the New York session, and there's like that connection between them, just know that that price action, specific price action, it will start sometimes from 7 a.m., all right? Sometimes it will start from 7 a.m. specifically, and it continues all the way to the end of the New York session. So this is the thing that I will not write it down, but you guys have to learn it when listening to me, all right? So from 7 a.m. further, it will have to be your time zone for New York session, all right? I'll not type it down. So what happened in the New York session? We have a low of London range, previous London range, yeah? That happened in the current day. We have the previous day New York low, which was not taken. And we have the previous day London range. Okay, previous day London range, which was not taken. And there's equal lows at that one. There's here equal lows, sell side liquidity. Okay, so what do? We extend the line all the way further because all of these lines are a combination of what I love calling sell side liquidity, which ICT has been teaching it. Okay, I will not take credit from him. He has been teaching the sell side liquidity. All right, and I'm not sure if he has taught the London range yet. I have not seen anything related to that, but yeah. So I only understand the New York session, which I told you about from it. Okay. However, this is how I understand it: is that if the lows of each session, each trading session, has not been taken in the current day or the current week, keep extending it, keep extending it. The market always tends to go back to that value. Okay. The market always keeps going back to these values. It wants to take them out. Okay, so I have been taken out on the London range at this point when New York session started. Done. The New York session low of the previous day was taken out. Done. I remove it. Okay. The London range of the previous day was taken out. Done. Okay. So if I calculate for you this market, okay, if you have went short from here, if you went short from here all the way to the profit range, you have 220 points for free. You have, as a trader, 220 points for free. Oh, sorry. Yeah, you have 220 points for free. So do you know what NASDAQ is? In NASDAQ, if you have 220 points you made, each contract, one contract is $20, all right? $20, and you're making 220 points, okay? So let's do the math. 220 points, and the profits you'll be taking, all right? The profits you'll be taking is amounting to around each $100, each 100 points, you're gonna make 2,000. So this is around $4,400, all right? This is from one contract, but imagine how much the multiples would be if you added 3 contracts, 5 contracts, 6 contracts, and the price that you're gonna to enter at in the future when I'm teaching you that price action. How do you execute your trades? You're gonna have a crazy amount of profits, all right? You're gonna have crazy amount of profits. This is how we need to identify our trades. This thing happens every single day, every single day, every single day. This thing happens every single day, all right? Every single day, the same thing happens. You mark the London session low, you mark the London session high, and if the previous day lows and highs of each session are not taken out, you keep them marked. Just like how I'm keeping this marked, the London range high here, and the New York session previous day high, I marked it. And I will skip to the day that I have decided to look at it, and there we go. The market jumps through it. The market drops way lower, and I believe that there is a liquidity down here. There's a session low that did not taken out, and this is the low that had to take the London session out, or some market out, as you can see here. So there is some session that went below here that it was trying to take out, so I will not go to it. But when it traded up higher, it closed here. And what did it want to do? It was too close to these highs of the London ranges and so on. It gapped through it. Okay, it gapped through it. I will talk about gaps, liquidity that is resting in these gaps, and what price or the market tends to do later on. But if you see only the ranges that we are identifying, currently we are identifying the highs and lows of the ranges. That's what I want you guys to do in the market. Do the highs and the lows that are not taken out in that week or the days within the week. If they are not taken out, if they are not traded through, mark them. They are quite important. And if you want to have some zones or target prices for your trading during that day, this is the perfect setup. Okay, this is the perfect setup. Price consolidates here in the Asian range, all right? And then in the London range, it targets the liquidity high here, which is resting at the London range high the previous day. This is The New York session high we talked about, it targeted in it targeted in the London session. Which London session? The London session that was in Monday trading, okay? That was in Monday trading. So why did we do that? Marking, because we had to show this stuff happening again and again and again, okay? What if the market is just going up? Well, I already given you some targets to do. This is consolidation, and if price is going up, where is it going up to? It's going to this liquidity. Okay, then where is the next liquidity? New York session high, does it test it? Yes, it takes it out. Okay, now what do? Do we rest? Well, of course, there might be some other factors previously, but what if we don't have any previous factors? You just wait. You do not trade. You wait. Do not gamble. Okay? Do not gamble. Okay? Wait until I teach you how you can identify future trades. Okay? You should wait. So this is the London session and all for you guys. And I really hope that you go to the charts, explore the London session highs, the New York session highs and lows. London session highs and lows, New York session highs and lows, Asian range highs and lows from the previous lesson I have done. Go spend time in the charts, okay? Identify those lines. I don't want you to do anything else, okay? Just identify these lines and just check how the market is reacting to it, okay? How is the market reacting to those lines? And whenever one of the lines is taken out, like over here, in this day is taken out, I remove it. This day is taken out, I remove it. This day is taken out, I remove it, okay? You don't require it. You may want to keep it later on, but if it is at a gap, but I don't recommend it. I just keep it whenever it is not taken out, that's all. Because there is a new trading session and there's a new London range that you need to keep the markups for, all right? So always keep in mind that these markups and these lines, the market always tends to go back to them to take them out and continue its trading day, okay? So see you guys until the next session, and much appreciated on keeping the time with me. Yeah, see you.